It's a new month, and you know what that means. Time to go through our top 5 stocks for the month of June 2024. And we're not going to waste any time. Let's start up with stock number 1, the biggest name out there right now, NVIDIA. Currently at a price of $1,200, this beast is going to be going through a stock split this weekend and opening up Monday morning, June 10th, at around $100, $120 probably at the split adjusted price, which means that if you have one share before Friday, that'll turn into, you'll add 9 shares to that, so you'll have 10 shares. If you have 2 stocks or 2 shares before, it'll switch to 20 shares. You get the idea. NVIDIA is my number 1 choice that I want to watch for a couple different reasons. Number 1, it's a beautiful stock pattern. We're still above our red SMA line here. We are still in an uptrend. I mean, anytime we've even gotten close to this red SMA line, we bounced. Continue investing and continue trading to this in the short term. Obviously, it's a great long-term name, but in the short term, I'm looking at the 20-day chart right now, and it's a beautiful setup. So let's watch and see what happens Monday with the stock split and what happens this first week as it goes through its stock split. But I think that NVIDIA is one to watch here. I think you just buy in any dips. There's really not much more to talk about in this one. It's the stock that everyone's been talking about is going to rally more. It's got a price target of almost $1,800, I think, $2,000 potentially. It's got a lot of upside to it. Of course, it's got a lot of downside because of how much it has rallied. If we pull back here to the past couple months, you could see it's hot right now. It's really high, but I think that it's got more room to run before it has a major pullback of any kind. So just keep watching it. Great to be trading throughout the day. It's got big moves to the upside, but it also does have some strong moves to the downside on certain red days, so keep that in mind as well. And our next stock on the list is AMD Advanced Micro Devices. This is another chip maker similar to NVIDIA, just a lot smaller. Hasn't been doing as well. It has fallen off of their highs back in early March around 220 area and hasn't really gotten that momentum from NVIDIA too much. It's had a couple strong days, but it's had a lot of pullbacks here and there, and their most recent quarterly earnings wasn't the greatest. But I do like the stock moving long term. It's a great semiconductor chip maker. It's a very, very strong company that has a lot of upside to it in the near future. Price targets of 180, 190, even close to that 200 level, so there's a lot of upside in the price targets in the short term. I think that you're getting at a steal right now to around 160. Will it pull back a little more? Potentially. If you can get it down to 150, maybe even the 140s, I think you're getting at an even better deal. But right now, I think it's a great deal. If you're looking for the short term, this is going to be a good trade if we can break out of this 170 area. Above 170, you can see there's a lot of resistance right now. And if we just take this here and we draw a little marker across, you could see that we have a lot of resistance here that wouldn't let us pass through before. Fell to the downside. We tried to break through and we couldn't. So if we can break through 170 and hold this resistance now, will turn into support in the future, which will allow us to rally up to 180, 185, and 190. So I think in the short term, there's a lot of momentum going for this one if we can break above 170. But if not, in the long term, it's a great name to hold on to. Next stock on the list is ARM, ticker symbol ARM. This is another big one, again, in the semiconductor space that follows exactly how NVIDIA looks most of the time, at least. It just went public. Was it back? Yeah, it was back in September. It went public. So it's starting to stabilize out as a normal trading stock. I don't like trading these new IPOs when they first go public, but this is a good name. I think the lockup period, that should be over by now. So I think this is a good name you watch for. Obviously, we have highs here on this 160, 150 area, and we are rallying right now. I think if you want to enter this thing in the long term, wait for a little bit of a pullback. You don't have to get the best deal ever, but I think it's a little hot right now. But this is a name I like trading off of because it follows NVIDIA, and because NVIDIA has this strong uptrending days, so does ARM. And this is a name that, look at this, 115 all the way up to 125 in one day off of a stock that's only $100. That's a $10 move. That's a very, very solid day. That's a 10-12% day right there you can get. So I'm looking at ARM to trade in the short term throughout the month of June, and then potentially buy in the long term if we're getting more of a pullback sometime during this month. I definitely think that ARM, though, is a name that I like to see in both a short term and long term portfolio moving forward in the future. Next stock on the list is Amazon. Amazon has been on fire, has recently pulled back, so I think that's an opportunity to potentially start to buy into some shares if you're not already. It's hot overall. I think that it's a little high right now just in general, but it's Amazon, so I don't think that we'll be seeing a major pullback anytime soon on this name unless the overall market pulls back. So because of that, I think you got to take it with a grain of salt here and say, look, we are trading below this red SMA line. If we get rejected here, we'll probably pull back down to the 170 area. You have a little bit of support here around 175, and then you have your strong resistance and high point at 190. So you're trading in this sideways pattern, but you got to watch that red SMA line, because if we do bounce off the red SMA line here, we'll fall back to the downside. We got to hold support around 175. If we don't, then we will fall below that. And then this is a dangerous zone down here, because you have not much here of support, and then basically after that, you have a lot of downside. So definitely watch Amazon. I like Amazon as a long-term investment. I do have shares of Amazon in my long-term account, but as for short-term, I want to watch it fall a little bit more and then rally, because Amazon likes to rally for several days at a time, and when it does, it has a nice slow-moving but strong uptrend, which allows us to take profits along the way, which I think is a really, really good thing about Amazon and the way that it trades. So great one to trade, and definitely one that wait a little bit for it to come back down before you invest into it for your long-term account. This next one, CMG, Chipotle, guys, this is just a name that has been on fire, okay? Back at October, November timeframe, this thing was around around $1,700. This thing has rallied all the way up to $3,200 now. Absolutely insane move. Their earnings every single time they report quarterly earnings is a complete blowout. They just destroy earnings every single time, which allows the stock to make $100 moves within the same day. So this is definitely a strong moving name that I want you guys to watch for a few reasons. One, because it's a strong mover. It's been in a strong uptrend. I like the look of it. But also, as we get up to the top here, we are doing a 50-to-1 stock split, okay? A 50-to-1 stock split. That is going to be huge for the name, and that is going to be huge for the stock moving forward. I want to see what happens when that stock split occurs, because I want to see if that's either going to get some more momentum before the stock split happens, or it's going to fall to the downside before the stock split, and then there's going to be a huge rally of people trying to get in when it's more affordable, because $3,200 for one share, it's a 50-to-1 stock split. So for every one share, you'll earn 49 additional shares to get you to that 50. So one would be 50 shares, 2 shares if you have currently would turn into 100 shares. You get the idea. And I just had to look it up because it wasn't showing on here, but if a shareholder has at least one share by June 18th, then you will be getting the additional 49 shares when the adjustment happens. So Chipotle, definitely a name I want to keep watch for after the stock split happens to see what type of momentum we get. We're hot right now. This thing is on fire. It's been hot for a while. We really haven't had any major pullbacks in this name. So definitely keep watching it. It's another one that's trading like NVIDIA, just continues to move upward and has been a strong mover since the start of the year. Started the year around $2,200 and now it's at $3,200. So it's a good, strong investment. It's always been a great company for the long term, but I think the month of June is going to be super strong with this one because of the 50-to-1 stock split. Next on the list we have is Nike. Now, Nike is a name that I personally am looking at and have invested into. You can see I've already kind of drawn out some lines, some basic support and resistance levels that I like to see on it. This is one that if we can break above this 95 area, this thing is going to take off back to the 100 area. And that's the key area where we need to get into, because this thing has been slumping. It has been a nasty looking chart, and I do not like the look of it right now until it breaks above this resistance line, which used to be support. So it was up at 125 back in December, looks like early January timeframe, and then fell hard off of this earnings report, and then every earnings since then hasn't been really great for the stock. So I want to see the stock have a turnaround this month because it's trading in this sideways pattern. And I like the odds that, okay, maybe if you don't want Nike in the long term, it'd still be a good swing trade for the month, okay? Keep it a couple weeks. If you're able to buy down here in the low 90s and then watch it hit this resistance point, if it can break through, take some shares when it first breaks through, take some shares off, take those profits, and then continue to watch it run. If it does, if it continues back to $100 and then breaks through that, I mean, that you're talking solid profits within the same month. So I definitely want to watch Nike for a swing trade opportunity, just to see it around this $92 to $94 as a buy-in point, and then selling some around $96, $98. If it can break through and hold this area, this resistance then turns into support, which allows us to say, okay, then it will hold this area, and now we can see if we can break through this $100 area, which would be another area of resistance I want to watch. And then from there on, just kind of take more shares off and take your profits. I like the way that it looks right now in the short term. Long term though, it's still on a downtrend until we can hold above this red SMA line and continue to trade through and break through these resistance levels. Next up in the list is GameStop, a name that everyone has been talking about recently. Roaring Kitty is back. He just did a live stream. There's a lot of news happening about GameStop right now, and it did have a strong rally up to that $80 price point, and then throughout the day, it's just been a strong mover. Some days we're up 20, 30, 40 bucks. But what I really, really want to see from this one is what's going to happen here with our second rally. We had the first rally here that went up to $80. We pulled back and we held the higher high. So like I said, we started around $10, $15. We rallied, we pulled back. Now we're in that $20 to $25 range. And then we had another small rally here. Not much anticipation, not much hype into it, but we still had a rally up to that $40, $50 area. We got to have one more huge rally and then pull back, so we're in that $30 to $40 range. I like GameStop to trade off of. I am not in this thing to go long term. I do have shares here in the short term that I'm looking for the next couple of weeks, maybe even next couple of months. But that's just because of the way it's trading right now. I just jumped in again. So this is one that I like to trade when there is momentum and hold it for a couple weeks at a time. I do day trade it a little bit, and I do recommend that if you want to day trade GameStop, it's a good one to day trade. But definitely keep in mind how volatile it is and how much risk there is involved in this one. There's a lot of opportunities to make money, but there's also a lot of opportunities to lose massive amounts of money when we see falls from $56 to $41 within minutes, okay? So you really got to be careful as to what you're doing with this. If you are day trading, swing trading, or long-term investing, understand what you're doing with GameStop. I like the name, though. I like the odds that this thing does have more runs. I like the odds that Roaring Kitty is going to pump this thing. And I like the odds that this could be a good trade for June of 2024. Next stock on the list is Shopify. Shopify is a name that had a massive beat down here back when they had their previous earnings back in May. It was unfortunate seeing for Shopify, and Shopify really has been on a downtrend for a little bit now. $92 was our last time we were at highs back in February. We had quite a rally from the later part of last year in October, November, December, and then staggered out pretty much in the 90s to 80s, and then fell, and we've been falling ever since basically February. I think that this is a good buy down here for a swing type of trade. You can see that we're starting to rally again. We finally broke through this area of resistance right here and allowed us to hold above it so far. If we can continue to hold above this $60 area, I think our next area that we want to watch for would be up here around 64, 65. And then this is our overall trending SMA line. So if we can break back above that, that means we would be in an overall trend. So until we can get back up into the 60s, I think you got to take this one with caution, as this could fall more, but I like the odds that it continues to hold at least 56. It looks like it's holding that pretty well. So this is what I'm looking at in the short term for a swing type of trade. Watch it hold inside this band. It broke through, but I want it to hold 60, which then makes this resistance turn into support. Again, all this is just resistance and support. There's a lot of other technicals I can go into, like RSI and volume and MACD and whatever else, but the matter of the fact is that $60 is an easy area where you could see resistance, because we tried to break through, 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 we couldn't, so we fell to the downside every time until we broke through here, and now we're holding above. Let's just see if we can hold above this $60 area, and if we do, then I think we rally to at least 64. See if we can hit that resistance area, because now this is our new support. We can take some shares off, or we can buy more shares when it gets near that support level, because we know it's going to hold. So understand that Shopify is definitely more of a watch than a buy now type of play, but it's definitely one that I want to keep watch for, because it piqued my interest, and a lot of people are watching this because of its massive beat down from $80 all the way to $60, and it fell a little bit more, but I think that it's time to finally see that recovery that Shopify's been waiting for. John Deere, the next stock on our list. This is an interesting one to watch. I don't know if you guys are invested into this. If I can pull it out even further here, we can see that the stock itself has been on a weird, where did my thing go here? There we go. It's been on a weird pattern. I don't like the look of it, because it's so choppy, but at the same time, it does have good opportunities as to where it's at right now. Around this $360 area. It does massive swings, and it takes quite a while. I mean, each swing is at least a month to 2 months, but now we're approaching this support area where we've hit it once back here, twice, 3 times, and every time it's gotten around here, it's bounced. And you can see this V-shaped bounce. So I'm expecting that eventually we'll see some sort of V-shaped bounce if we can hold 360. So I think if you buy a couple shares here, you buy a couple more shares down below around 360, you build up that short-term cost basis, and then you get the total amount of shares. Like, let's say you want 10 total shares, you buy 3 now, you buy 3 when it dips a little more, you buy 3 or 4 again, you got your 10 shares around 360, 365 average price. Boom, you finally get that bounce, you run up to about 380, 390, you start to take some shares off, you see that it gets a little choppy in here, and then it rallies to close to 400, boom, you take the rest of your shares off, or you keep on letting it ride. You do whatever you want, but based on how we trade in the past, this thing rallies. It takes a while though. I mean, look at our time frame down. Oh, you guys can't see that, but from December until this is about January, February, and this rally here is from February 26th to about late April. So these are longer term time frames. This could be like a summer trade where you buy in June, and then August or September you're looking to sell when we get up here. But it's a strong move when you're talking $40, $50, $60 on a reliable stock. And also John Deere for the long term. I'm in this one. I like John Deere as a company, but we're looking just in the short term for the month of June to buy this one because it has pulled back from its previous resistance point up here, and you can see that it bounces up in this area and tends to fall, but then rallies back and bounces off the support levels. So definitely watch this 360 to 370 area for John Deere. Last one on the list, Disney, the stock ticker symbol DIS. This is a name that it confuses me. We were down by COVID lows back in October, November of last year, and then we started to see this thing move, and basically since January, it had a really strong move from $80, $90 range all the way up to $123. This was on a tear. This was reporting good earnings, having strong outlooks for the year of 2024 and 2025. It was a good name to potentially get into, especially at a cheap price. And then ever since we hit 120, for some reason, we pulled back down. We really haven't done a whole lot. And then we reported earnings, and it tanked even more. So I like Disney at $100. I think you're getting at a good deal if you want to get into the company. I believe that if you want to get into the tourism attraction type space, this is the name you want to hold. And they're a lot more than just the parks and rec type thing. They're more than that. They have the streaming services. They have ESPN. They own a lot, and they're a large corporation. So I think that Disney is one that I want to watch for at this $100 level. This is a great time, I believe, to buy in for the long term, personally, and then also for the short term. Let's see if we can start to see this thing bounce and maybe stabilize out, because when it does rally, it tends to rally for several days and has really strong uptrends. But until we can get to that point, I think we just keep this one on a watch, unless you're looking for the long term and you want to hold this one and start a position now. At $100, it's not a bad deal. There's a lot more upside than there is downside, and I think that Disney, once it gets out of this funk, has a lot of upside. Guys, those are my top stocks. I know I went through a couple extras with y'all today, but those are my top stocks I'm watching for June 2024. Let me know in the comments down below what you guys think about these stocks. What stocks are you guys watching? If you are new here, hit that subscribe button, like the video, comment down below, and I will see you guys in the next video. Peace out, everybody.